In 2026, something strange is happening in America. Millions of middle-class families are working full-time, earning more than they did just a few years ago, and yet they feel financially squeezed. Rent keeps climbing, insurance premiums are rising, property taxes are increasing, groceries, utilities, and everyday expenses cost more than before, and buying a home, once considered the foundation of the American dream, now feels almost impossible. In many US cities, you need a six-figure income just to afford an average house. Not luxury, not waterfront property, just average. So, what changed? Why does homeownership feel out of reach for the very people it was built for? In this video, we break down the real numbers behind the middle-class squeeze in 2026 and explain why owning a home in America feels harder than ever. For decades, the American middle class was built around one central idea: stability, a stable job, a steady income, and eventually a home of your own. Home ownership wasn't just a financial goal, it was proof that you had made it. In the early 2000s and even into the 2000s, a dual-income household earning around the national median could realistically afford an average home in many parts of the country. Mortgage rates were lower, home prices were closer to income growth, and property-related expenses were manageable. But after 2020, that balance began to break. Home prices surged at a pace far beyond wage growth. In many markets, prices jumped 30 to 50% within just a few years. At the same time, mortgage rates climbed sharply compared to the ultra-low levels buyers had grown used to. The result was a dramatic increase in monthly payments for new buyers. A home that once required a manageable mortgage now demands hundreds, sometimes over $1,000 more per month. And that's before adding insurance, property taxes, maintenance, and utilities. The foundation that once supported middle-class homeownership has shifted, and for many families, the math simply no longer works. If rising home prices were the only problem, the middle class might have adjusted. But the squeeze doesn't stop at the mortgage. In 2026, the hidden costs of home ownership are rising just as fast, and in some places, even faster. Home insurance premiums have surged across multiple states, especially in areas exposed to storms, wildfires, and flooding. In parts of Florida, California, and the Gulf Coast, annual insurance costs have doubled within just a few years. Some insurers have even pulled out of entire markets, leaving homeowners with fewer options and higher prices. Property taxes are also climbing as home values rise and local governments adjust assessments. Even if you locked in a fixed mortgage rate, you cannot lock in your taxes or insurance. Then there's maintenance. Labor shortages and higher material costs mean that basic repairs now cost significantly more than they did before the pandemic. A new roof, HVAC system, or plumbing issue can wipe out months of savings. For middle-class families, these expenses are no longer rare surprises. They're becoming expected realities. Owning a home in 2026 isn't just about qualifying for a loan. It's about sustaining a long list of ongoing costs that continue to grow year after year. You might assume that rising incomes would solve this problem. After all, wages have increased in many sectors over the past few years. But the reality is more complicated. While salaries have gone up, they haven't kept pace with the combined surge in housing costs, insurance, taxes, and everyday living expenses. In many metropolitan areas, home prices have outpaced wage growth by a wide margin. That means even households earning more than they did 5 years ago are facing a smaller margin of financial safety. A six-figure income, once considered comfortably middle class, now feels stretched in cities where the median home price exceeds $500,000. And it's not just about qualifying for a mortgage. Lenders may approve borrowers based on debt-to-income ratios, but approval doesn't guarantee comfort. Many families find themselves house-rich and cash-poor, dedicating a large share of their income to housing while cutting back elsewhere. Add student loans, car payments, childcare, and rising healthcare premiums, and the financial pressure becomes clear. The middle class isn't necessarily earning less, it's that the cost of maintaining a middle-class lifestyle has risen faster than income can keep up. That imbalance is at the core of the squeeze in 2026. As pressure builds, many middle-class families are reconsidering whether buying a home even makes sense anymore. Renting, once seen as temporary or financially inferior, is starting to look like a strategic choice for some households. The traditional belief was simple. Renting builds no equity. Buying builds wealth. But in 2026, the comparison isn't that clear. In many cities, the monthly cost of owning, including mortgage, insurance, taxes, and maintenance, is significantly higher than renting a similar property. That gap forces families to ask a difficult question. Is stability worth the added financial strain? At the same time, renters face rising lease renewals and less control over long-term housing costs. There are trade-offs on both sides. Buying offers potential appreciation and control, but it also locks families into high fixed expenses and market risk. Renting offers flexibility, but little long-term asset growth. The middle-class squeeze isn't just financial, it's psychological. Families are no longer choosing between good and better. They're choosing between risk and uncertainty. And that shift in mindset reflects a deeper change in how Americans view homeownership itself. The long-term consequences of this middle-class squeeze are already becoming visible across the country. First-time homeownership rates have slowed in several markets as buyers delay entering the market or abandon the idea entirely. More families are choosing to stay in smaller homes longer, postpone upgrades, or relocate to lower-cost regions in search of affordability. Others are moving from high-tax, high-insurance states to areas where the overall cost of ownership is more manageable. This migration pattern is quietly reshaping housing demand across the United States. At the same time, household debt levels remain elevated, and savings buffers have thinned for many families following years of inflation. When housing consumes a larger share of income, there is less room for investing, retirement contributions, or emergency funds. That shift has ripple effects beyond individual households. It affects local economies, spending patterns, and long-term wealth accumulation for the middle class. If home ownership becomes increasingly delayed or concentrated among higher income earners, the traditional pathway to building generational wealth changes as well. The squeeze in 2026 is not just about affordability today. It's about what the middle-class financial future looks like over the next decade. The middle-class squeeze in America isn't the result of a single crisis. It's the accumulation of multiple pressures hitting at the same time. Higher home prices, rising insurance premiums, increasing property taxes, elevated mortgage rates, and the broader cost of living have combined to create a financial environment that feels tighter than it did just a few years ago. For many families, the issue isn't laziness or poor planning, it's math. When housing costs grow faster than income, the margin for stability shrinks. The American dream was built on the idea that steady work could lead to ownership, security, and upward mobility. In 2026, that pathway still exists, but it requires more income, more savings, and more resilience than before. The question now isn't whether the middle class is disappearing. It's whether the system can rebalance in a way that restores affordability and opportunity. Until then, millions of families will continue navigating a housing market that feels less predictable, less forgiving, and more demanding than ever. If this breakdown helped you better understand what's happening, consider subscribing for more clear, data-driven analysis on housing and the cost of living in America.